If you're planning to trade tomorrow, slow down for a moment because the market has a quiet way of setting traps for traders who move too quickly. And tonight we're going to break down SPY. But we're also stepping back to look at the Qs, the futures market, forex, and some commodities. That's right, because when you understand how these markets move together, the real opportunity begins to appear. We got to execute. All right. Listen, I'm Coach UV. Welcome to the unique trading group where strategy meets mindset and discipline turns into income. And right now, the market is sitting in a very interesting crossroad. Not panic and not so much certainty, but one of those moments where patience begins to matter the most. Way more than a prediction. Got to be patient. And in moments like this, the market often begins to set quiet traps. So what's our strategy right now? All right, my approach. It needs to stay simple. And I call it the double and the triple threat combo trade. All right, the double and the triple threat combo trade. Now, it's 2 time frames. It got my decision. The weekly chart shows us the larger institutional direction. The 30-minute chart shows us where momentum begins to move. When these two perspectives align, probability begins to shift. So we're going to use our higher time frame as our bias, of course, and we're going to use the smaller time frame for our entry and our exit. So let me quickly show you here. Here's the weekly chart. Looks really ugly, right? Yeah, it's interesting. A very, very interesting chart. This could go both ways, which is why it's important for you to understand risk to reward when it comes to trading and not just jumping out there, jumping straight in the water and pressing a button when you see a green candle or pressing a button when you see a red candle. All right, you got to have context. So let's break down this spot chart. All right, SPY. Because this is where most traders are going to focus tomorrow. It's SPY. They're going to be focused on the SPY. But price alone rarely tells the full story. So markets move towards liquidity, right? They move towards liquidity. You see the chart in front of you. You see that we have made lower highs. We've broken previous lows from previous weeks. This is clear breakdown, right? And what looks to be on the weekly time frame right now is a inverted handle. But this is trading view, so this is outdated right now. We don't have the real-time data. I think we have more so of a bullish candle on the weekly from all this extreme selling. But don't worry, we're going to touch into that, all right? Because when that liquidity gets swept, that's often where the smart money trap appears, and we're going to talk about it. So here's that triple threat concept. The triple threat setup happens when 3 elements line up, all right? The weekly bias, the 30-minute structure, and confirmation from the broader market. When those 3 voices agree, the probability a meaningful move increases, all right? The probability of a meaningful move increases. All right, so right now we have the weekly chart. Let's go ahead and put our box around the weekly chart. Okay, this is going to be inside or outside of the daily price movement range, but right now we want to go ahead and we want to measure time. Now I want to flip our view over to the commodities. This is going to be very important as well. All right, the commodities. Right here we have the Japanese yen against the US dollar, and this is the weekly time frame. Okay. Let's see what we have here. All right, we have a technical break on Japanese yen and the dollar right now, and we need to get above these previous ranges right here. Obviously, we are in a downtrend, but we are at a demand zone here, right? And in order for the Japanese and the dollar to move towards the upside, all right, what you're going to want to see is a clear claim above 0.006414, all right? That's what you want to see. You want to see that. Very important. In order for us to see any type of momentum back towards the upside, all right, we'll have our classic W shape, okay? Let the bears try once, let them try twice, okay? And now we know we got them trapped, and we want to run those stops as our fuel. Those stops are right there at the neckline of that W, all right? Now, everybody's focusing on the indexes and commodities, all right? They're telling a story as well. All of them are telling a story. But I want you to watch gold, I want you to watch silver, and I also want you to watch the energy markets like the oil and gas. Now, I'm going to show you some of these charts, okay? So you guys can keep up to date, all right? This is the market view, right? The global market view, all right? Right here on gold on a weekly time frame. You know, it's making an inverted candle, trying to take its way back to 454. If we can hold demand here and you see volume come in and buyers step in at 454, we can see a reclaim towards the upside to create a potential another higher low on this uptrending market. But if we cannot hold above that level here at the point of control at 553, 554. Then of course we're going to drop down and revisit some of these lows here at the bottom range, which is 441, and of course buy our 21 EMA at 424. This is just a scenario. Now we can talk further later on in the weeks, in the months, about a price drop here, but we got to get there first. There are some moves that need to be made, and there's some economic data that's going to be coming out. All right, global markets, futures and currencies add another layer to the picture. Now this is what I have on gold, and we're going to quickly move through these. All right, we also have silver. We're going to check out silver, all right, here on the weekly chart. And remember, if this is your first time watching, just understand that the higher time frame is your bias. It's the most important. It gives you the sense of direction. What are we doing? Ranging? Are we uptrending or downtrending? Very important. And the smaller time frames we use to execute understanding the bias, so we can spot opportunity when others see fear or when others are in greed. All right, and don't worry, we're going to get into it. Now right here on silver, this is a big thing. Okay, this is a very big thing right now going on, because professional traders rarely watch just one chart. They watch how capital moves across global markets. Right now we checked out some of the forex pairs. Right now we're looking at some of the more of the commodities, and this silver chart is amazing. Right, ever since we got the explosion with everything going on with the war, Venezuela, the war in Iran and Israel, things of this nature, the current administration are doing things that are affecting the market, and we gotta accredit some of the news, some of the propaganda. It all plays a part in fear and greed, but as a result you get these explosive moves. And just like here on silver right now on a weekly time frame, we are making a higher low. Right, we did manage to reclaim some prices to make a lower high right here. A higher low. Price closed higher than its previous low here, but we are showing some signs that we could retest here on the 21. I'm going to show you why I say that. Okay, we're going to turn on the Heikinashis here. Now, in order for silver to see some sort of sustained power, same as on the other ones, right? Demand at the point of control at $70. If it can't hold $70, we're going to slip here within this range here, right? We already see the range right here, guys. 70, 67, all right? We see that, all right? We're inside of a range, okay? We're inside of a range. We see that, all right? Clear, okay? And so what we want to try to do is catch the ranges at the top for the best optimal entries and exits. Okay, see that what it's doing now, rejecting. Right now we're in the middle. All right, so we could go back to retest here by the 21, possibly have a technical break, or we can continue down on silver. What's the likelihood of that? We got to get a break of the 21 and break out of this range. If we do break out, never chase. Wait for the breakout pullback to the same zone it broke out from. This will be a more optimal trade if the bears can come in with more volume, and we can create what? We can create this lower high right here, hypothetically, right, subjectively, right here, where we trap in those here, right here at that breakout point of the bottom of this range. When we break out and pull back, if we are still bearish, we want to catch this entry to go back towards the downside to retest some of these lows. All right, this is just a scenario here, right? But we might not get that, but we have to hold the belly of this range here, all right at the 21, 66. All right, 64, we got to hold in order to see some volume, and the bulls come in and show some volume, more than average volume, or getting over or getting above previous closes prices and previous range lows and highs. Then we want to try to get into the momentum to retest some of these highs on silver. I'm going to get back over to the SPY, and just real quick, guys, if this breakdown is helping you see the market from a different perspective, take a second and hit the like button right now and subscribe if you're not already subscribed. It helps this content reach traders who actually want to learn how markets move. And if this is your first time watching and some of the ideas sound new, don't worry. Inside the live community, I go much deeper into these concepts. I'm not a financial advisor, but I am a mentor and coach, and I'm always honest about this craft. None of these techniques are guaranteed, and trading is about execution, and every trade carries substantial risk. It could, right? So that's why inside the community we move step by step, thinking in probabilities. We are defining our risk to reward. Guys, understanding that not every trade needs to be a massive winner. Percentage gains, executing well. Sometimes the goal is simply clean execution and emotional control. We got to be able to manage these trades once we get in that. And once we get into those trades, a lot of times this is not discussed on YouTube or talked about. What do we do once we enter? We got the perfect entry, the perfect entry, but what about managing the trade? And this has to be learned, a skill, and it can be taught. So get your learning curve. These patterns are designed to be simple, repeatable, and easier on the mind of a trader. Right? So if you're ready to shorten your learning curve, keep an eye out for the link that pops up right above. Come learn with us inside the Unique Trading Group. All right, now, remember this. The market rewards patience. The market rewards patience, guys. This is what it's about. All right. Weekly was our bias, our high time frame. And you can see SPY right here on the 30. All right. I do see a massive squeeze if we can get these bears to commit on this market. All right. This is important. So listen to me. Again, the market is going to reward patience, not the fastest trader. The most disciplined one. You with me? The most disciplined one. This is what matters. And if you can just stick to your plan first and foremost, guys. Stick to your plan. The risk framework should be based around that. Before any trade is taken, 3 things must already be known. Entry, risk, and exit. Okay? If those 3 things aren't defined, the trade simply isn't ready. Entry, risk, and exit. All right. So heading into tomorrow, we watch carefully. SPY for structure, QQQ for confirmation, commodities for deeper signals, and we wait patiently for the market to reveal its hands. All right. Now I want to go back to the Qs. All right. Just for you guys to see how similar some of these markets look. Okay. As I had stated before in a previous video that we dropped over the weekend, is that smart money is talking right now. Okay, we have what we might see a triple bottom here on the Qs. All right, the bears might be exhausted and we could revisit, but guess what? We have to find volume. Now we can have automatic rallies in the market, absolutely, okay, but that doesn't mean that we're overly bullish. All right, we can have automatic rallies, of course we can, right back towards the upside. But what you want to think about is we have these pockets, right? And you want market to break. You want to think about market structure. Okay, so I'm giving you guys these signals here. As you learn, we got to get above 595. Period. All right, we got to hold above 595 on the Qs in order to reclaim some type of momentum trade towards the upside, right? Just for us to do what? All right, catch this 21 here. All right, get us a 3 to risk reward from 95 to 98, right? Maybe the market creates another higher low. A lower high. Excuse me, guys. This will be your lower high. All right, and this will be the spot where there'll be some rookies chasing. And we're just filling in this gap. There's a gap here. See, this is a space where buyers and sellers didn't agree. There's no selling and no buying. It's an inefficiency in the market. That creates a gap. There's no wicks in between here. It's just this big candle, a top wick here and a top wick there. All right. This area here, these 3 candles, the green, the red, and the red. Right there. Exactly right here. That's exactly what I'm talking about. All right. The gap is in between here. And so that's what you want to think about for the Qs, because these are technical patterns that you're going to be able to execute when it comes to the market. Same with the SPY. I want you guys to understand what you're dealing with. I want you to understand how big this is. All right. Because there are people who are trapped. They're short right now. All right. The market opens up in another 30 minutes. Right. In another 30 minutes, we got the futures market opening. Right now, at the time of this recording, it's 5:37 p.m. Sunday night, and I wanted to give a special trading alert for the community to understand what we're looking for. All right, because we can see some massive short squeezes, guys. We can. All right, especially if the fear and greed index is leaning towards extreme fear. All right, it's more so like a contrarian view. All right, now listen, before we go, I want to show you guys real quickly something special and near and dear. All right, if you want to check out that link below and join the community, this is a little look of what we have here. All right, look, tired of losing? It's your turn now. All right. I was where you are, frustrated, confused, watching money disappear. I figured it out the hard way so you don't have to. No signals, no gambling, just real institutional knowledge that gives you an advantage at a glance. Now, you have exclusive look at an app that I created for the trading community that nobody has access to. It's called Auction Insights, right? An app that's built for decision and emotional control, right? It's Auction Insights, an advantage at a glance. All right. If you want to know more about that, all right, please comment app. All right, just comment app below. If you want to know more about the app that I've created for the community, just comment below so that way I know the interest, and I got a special drop for you guys. All right, exclusive drop for you guys soon. All right, so listen to me. Right, this is where strategy meets mindset and discipline turns into income. And I'll see you guys in the next breakdown. Don't forget to like and subscribe. Check out the playlist. Let's push these videos to those who really need it and grow this community. The perks with that. Got a surprise for you guys. All right. Till the next time. Peace.